Hello everyone. This is the pre-market report video for today, June 5th in the Indian stock market in terms of Nifty and Bank Nifty. Last Friday, profit booking in IT stocks made the Nifty really very volatile. Please have a look here. Both of them positive and gap up, but after 1 hour, IT stocks started to drag the Nifty throughout the day. And it's kind of understandable since despite posting very bad quarterly results in the last 1 month, IT stocks increased over 6%. In comparison, Nifty increased only 2 to 2.5%. And another possible reason, Friday was the ex-dividend day for Infosys. Thus, Infosys was the top Nifty negative contributor. So, IT tried to drag the market, but Nifty keeps on took support near 18,500, which was really a very good thing. And of course, macros such as positive auto sales, phenomenal manufacturing PMI data, and GDP growth rate, which was mainly due to infrastructure push, supported the market. All these made realty, auto, and metal stocks bullish, and indirectly it supported the Nifty index. So in the end, Nifty closed 0.25% positive. In terms of institutional activity, for the second consecutive day, FII were net sellers and DII was a net buyer. FII net sold for approximately 660 crore rupees, whereas DII net bought for around 580 crore rupees. Which is okay, but the real thing we need to note here is, again the trade volume higher compared to the normal average take. So it means some FII was reshuffling their portfolio. Then after our Indian market, because of this debt ceiling passed in US Congress on the late Thursday, made all European market to close over 1% positive. And that positive global momentum was seen in US market as well. Anyway, in addition, before the US market opening, US Labor Department released the unemployment rate. I hope you guys remember last month this data came as 3.4%, which was 53 years low value, and it immediately crashed the market. Now for May month, finally the unemployment in US increased to 3.7%, and it was also higher than that of the expectation. Here, this macro is not good. Unemployment is increasing. However, market wants this, so Fed can slow their interest rate increase and potentially pause in the upcoming meeting. Because of that, on Friday, all three US major index opened a gap up of over 0.5%. In addition, another data, Bureau of Labor Statistics jobs report showed that non-farm new jobs increased by 3,39,000. Well above expectations of less than 2 lakhs, and also above compared to the previous month data. In a normal day, this is not what market wants, but increase in unemployment and decrease in hourly earning was much significant, since decrease in hourly salary growth will directly control the inflation. Here, I voluntarily didn't mention any numbers regarding hourly earnings growth rate reduction, then it will be too much of numbers. However, just remember or note this, that the wage rate is not increasing as fast as that investors were afraid of. All these made the US market super duper bullish. Dow Jones increased 2.12%, S&P 500 up by 1.45%, and Nasdaq was too increased over 1%. In case of VIX, it dropped another 6% and moved below 15 to 14.6, which was very low for US market, and last time this much low was in 2019. However, both dollar index and 10-year treasury bond yield increased marginally. Then coming about oil, last Thursday, the price was increased on the expectation of OPEC plus countries to reduce their oil production volume. And same fear increased the oil price further 2.5%. In numbers, Brent crude oil increased to $76.5 per barrel, and WTI crude oil moved near $74 per barrel. Now on Sunday, Saudi Arabia did announce the oil production cut of 1 million barrels per day till the end of July. So I'm expecting this will put further pressure on oil price and possibly move the Brent crude oil back to around $80 per barrel. Let's see. Regarding Indian ADR, as we know for Infosys, it's ex-dividend day. So except that, all other Indian ADRs increased, particularly HDFC Bank, it increased over 1%. Then about SGX Nifty on Saturday morning, it closed at 18,717. As usual, equating it over spot market shows that Nifty to open positive gap up of 80 to 100 points today. So that's all about global market, what happened on weekend. Now moving to the next topic. There are three important defining macros this week that we need to look out, and those are World Bank's global economic forecast, RBI's interest rate decision, and finally, very important, monsoon progress. First, from Monday onwards and throughout this week, investors will be looking at the Indian Meteorological Department. As per their previous guidance, this year's monsoon has to start from today onwards. So, I'm expecting all the rural and agri-related stocks will be on focus. Then second, on Tuesday, World Bank going to release its latest projections for global growth. Following a day later, OECD will be releasing their own forecast. Just for info, last month, World Bank warned about slowing global growth. Meanwhile, OECD in the last March, it increased its global growth forecast. Anyway, both of them are very important parameters that will define the global momentum. Moving on, 8th June at morning 10 o'clock, RBI is going to announce their June month interest rate decision. According to Reuters, the present expectation is to keep the interest rate same as 6.5% since Indian consumer inflation is well below the RBI's target 6%. Anyway, these are the three important macros that we need to look out for in this week. Now, let's move to the Indian market related info. On Friday, after our market hours, RBI released the bi-weekly bank's loan growth, deposit growth, and weekly forex reserve data. All comes okay, but not good as expected. Loan growth again increased over 15%, but surprisingly, deposit growth increased near 11% compared to last month's 10.4%. Then regarding forex reserve, it dropped around 4 billion and moved to around 589 billion US dollars, which is not good since it means RBI is defending rupee from falling. Simply, there is not enough foreign fund inflows into the country. So I guess this deposit growth is really positive, particularly for banking stocks and thus the Bank Nifty. Other than this, there is not much since whole weekend was about the train incident in Odisha. Moving on, about palm oil price, after reaching over 7,000 Malaysian ringgit per ton, now there was a heavy drop in price to around just 3,300 Malaysian ringgit per ton. But however, wheat price and sugar price completely depends on the starting of monsoon this week. If the monsoon is good, then we can say it's positive for FMCG stocks, especially the food manufacturing ones, since it will increase their profit margin. In case of Reliance, I expect it to be positive since oil prices now increasing and no windfall tax. On Friday in Indian market, Reliance closed negative of 0.32%. Despite that, on the global GDR, it increased by 1.82%. As a summary, global momentum is very good. Now this debt ceiling bill is also passed in the US Senate on Saturday, so no more talk about it till 2025. In addition, on Friday, US market closed overwhelmingly positive, to some extent Indian ADR as well. Even SGX Nifty is indicating a gap up of over 100 points today. Will it happen? Will it sustain throughout the day? Let's see. Only time will answer those. About the things to look out, before our market hours, China service payment data is due and that might dictate the Asian market. During our market hours at 10:30 am, India's service payment data is scheduled to release. The expectation is to be around 57. This data will have an impact on Indian IT stocks. Then between 11:30 to 2 pm, both whole and individual various European countries payment data. Finally, in the aftermarket hours, US service payment data and factory orders are scheduled to release. So these are the some items we need to keep an eye out today. Coming to technical, in daily chart, Nifty forms a third consecutive bearish candle. However, the good thing here is it's a short bearish candle with a medium upper and longer lower shadow. Basically, it's a hammer candle, or to some extent we may say a doji candle. As we discussed a lot of times, if the same candle forms during the price advance means, then it's called as hanging man candlestick. Now it forms after a small price decline, and I believe that Nifty this week has witnessed the consolidation, so we can say it as a hammer candle. Here, what this candle is telling is, there was a strong selling pressure initially, but by the time of close, buyers regained the control. This kind of signaling the price was bottomed out and possible upward movement. Just one more thing here, on the positive side in the last 5 trading session, only one Nifty closed below 18,500, that's too on the MSCI rebalancing day. Other than that, all other 4 days Nifty defends 18,500. In addition, on the hourly chart, At present, Nifty is trading around at the lower end of the reverse channel, 18,500 to 18,450. And the key hourly moving averages and the momentum indicator has triggered a fresh positive crossover, which is also a buy signal. So today, if Nifty moved below 18,500, then it will drag further down to 18,400 zone, while if it moves on the higher side, then 18,700 will be the immediate hurdle. Anyway, at present, Nifty is trading near and traded at the same small band for 5 consecutive days. And I checked the historical data for whatever the index data I got. In that, whenever it trades in the same place for more than 3 candles, at that time, the most frequent and probable scenario was moving above. So, I believe it's kind of hinting at the possibility of uptrend. But sustaining that in short term, I strongly believe that should be based on the global momentum. Then about Bank Nifty, it forms a medium bearish candle with minor upper and lower shadow, and it's too similar to Nifty as it trades in the same band for the last 4-5 trading sessions. Now 44,500 looks like a mountain to pass. I mean, Bank Nifty is kind of stuck in the same range from May 12th onwards. Now it's going to be almost 1 month and still it struggles to pass above. At present, to some extent, Nifty was limited by Bank Nifty. So if it crosses above 44,500, then that might add some rally to Nifty as well. Moving on, from option change in open interest, there were a lot of new call options were added at 18,600 and above. Similar quantity of new put options added at below 18,600. The maximum new put option addition is at 18,500. Thus, 18,500 is the immediate support to look out for. Then, regarding overall options open interest data, 18,500 and 18,600 got the huge number of short straddle. Thus, the next maximum points, 18,400 is the strong support to look out for and 18,700 is the resistance to break. Then coming to Bank Nifty, based on overall options open interest data, huge short straddle were present at 44,000 and also some between 43,700 and 44,100. Then the next nearby maximum put option open interest without significant call option is at 43,000. Thus, 43,000 is the support to look out for and the next nearby maximum call option open interest without significant put option is at 44,500. Thus, 44,500 is the resistance to break. So, that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.